is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And we had a big pop as we started off the morning. Started, about 5 or 6 o'clock on a bogus statement coming out of Greece saying that they were going to capitulate. Everything was wonderful. And they had this to say, too.
Everything is awesome.
And, of course, by the time it came to actually make the announcement, it was more like this.
Danger, Will Robinson. Danger.
And I don't know what else you can say about that, but it is, other than going out and having a toga party, I don't know what else they can do because they don't have any cash. They've had their bluff called, and now our market is starting to react to it. I said yesterday, and I think still today, we've got a market that's probably range bound, and we're probably looking at 2065 as we go out for trading as we exit stage right for the weekend tomorrow. I don't think there's a whole lot more downside out here. I think that downside's going to come next week, maybe Monday, Tuesday, when everybody figures out that the miserable commie socialists over there, who I know as well as the back of my hand, because I've read lots of books about what they do and what they say. One thing is sure, and that is that they have a reality distortion field, and they keep trying what's been tried 6,000 years of recorded history that fails and fails every single time. And that is a wonderful idea, but because of human nature does not work. But they're always just one step away from saying it's going to be different this time. And in politics, probably just as dangerous as trading when you hear those words start to run. But I do digress. We've got 2.2 billion shares yesterday on the move down. We had I thought we just tied. We ended up with about 200 million more shares than we had on Monday. And I don't think there's anything changing other than we busted through 2070. Could we sell all the way into the weekend? We could, but I have a feeling that if we were a submarine sinking and taking on water, there's a great movie out there called Das Boot. Maybe the Germans are watching that. It is a fabulous movie if you've never seen it, especially if you watch the movie in German with subtitles, even better than the English version of it. But I'm trying to remember the guy. He's a great filmmaker. He's made a ton of movies. Wolfgang something or other made the movie. But at the very end of the movie, they're going to all die. And all of a sudden, guess what? They just happen to land on just a little bit of sand. And that holds them up. And they work real hard for about 2 days, figure out a way to get the water out of the boat and come back to the surface and take off running as fast as they can. But a very interesting move in it. No, it's not Wolfgang Puck. I think the people in our engineering room are touched. Maybe there's a gas leak in there. I'm always worried about it. Anyway, Wolfgang, I'll check it during the break. But always an interesting thing. But there is just nothing that comes out of socialism that ever is good. The only thing is how long it takes to fail. And then when it fails, they don't admit that it fails. And so you have countries like Argentina continually coming back. And probably even more idiotic are the people that lend these people money. The idea that everybody else is going to work and let you have an early retirement before your kids even get out of high school. I don't think the Germans are going to cotton to it. But it's time to go on with a little bit of history.
That it's all just a little bit of history repeating.
It is this day in 1970, Xerox Palo Alto Research Center, otherwise known as PARC, opens at 3180 Porter Drive in Palo Alto, California. Here, a talented team goes to work on developing the laser printer, the PC, the graphical user interface, and the Ethernet. And guess what? They go on to make money out of none of it because basically they had a bunch of old guys running Xerox that had absolutely no idea what they had. So the PARC Research Center was more than willing to give tours to anybody that would come through. In 1979, a young Steve Jobs comes wandering through and sees for the first time the graphical user interface that they'd had. Of course, the Stanford Research College, not too far from them, had developed it in 1966 or 7 or 8. Anyway, there's a great video. If anybody ever wants to watch it, all this stuff and the Ethernet and everything was invented long before any of these guys. Not to say Steve Jobs didn't see the idea and figure out how to commercialize it. But they all say that they invented it. But even us and everything I do in calling the stock market, I stand on the shoulders of others that did stuff before me. And he was no different. But basically, he stole everything that PARC was working for to make the Lisa and then the Macintosh later on, and quickly forgot that these guys had anything to do with it. But on this day in 1970, this research center opens up, shows everybody how it's done, and quickly decides to go off and do nothing with it. But not uncommon in the computing industry. But we will... Werner Herzog. Werner Herzog. He also made Grizzly Man. I just thought of his name. If you haven't seen that movie, I think it's on Netflix right now. But it's another nitwit who thinks that bears are for hugging and gets eaten by one. One of the most hysterical movies ever, as far as I'm concerned. But just goes to show you, you believe in stupid stuff, a bear will eat you. But I do digress. Eurozone today, of course, I suspect their futures are down now that reality is setting in, that there is no Greece deal. But everybody ran with it as far as they could this morning. DAX was up 2%. The FTSE's up 1.35%. CAC up 1.94%. Interestingly enough, the opposite over there in Asia, the Shanghai was down 5% after being up 5% yesterday. The Nikkei was up almost 0.5%. The Hang Seng up 1%. But I suspect that going into the next 2 days, that they're going to have more downside. A classic bubble, and the bubble has popped in Asia, which is not going to help us any. And if we're closed on Friday and they have a couple of horrible days before we come back, whether Greece does anything or not, we may have a hangover from the Asian markets. And I suspect that if they dropped the interest rates and nothing happened, what do? Do they drop them yet again? It's a horrific bubble on companies that you have no idea how much money they're making, and no one else here in the United States knows either. One thing I know is that's a good recipe for a bubble, and I will always take the other side of that trade. It may take a time or two to get in at the right time, but there's going to be huge amounts of money to be made on the Asian markets to the downside. Of course, we talked about it. Basically, Germany's saying, shut up. We don't need basically anything about what you're talking about. I think I had a clip here of what they were saying. Yeah, I got some clips about what the Greeks were saying out here this morning.
Could you, shut up and give us some money? We'd like some money. Yeah, money. Money is cool.
That's pretty much what I got out of it, and I don't think that there's anything else to say about it. The Greeks have no money. They overplayed their hand. Now Germany's going to let them fry, let them simmer, let them be out there like a little bit of bacon frying in the sun, and maybe they'll wake up. I don't think they will. I think that when you truly believe that the world owes you a living, you are bound for hard times. And I just don't see that at all changing. We'll watch how this market closes out here today. But I'd like this thing to close, up mildly, light volume, up a little bit, maybe more tomorrow, light volume. This 2070 area is the pivot. It used to be 2108, where every push above that had no volume. Now every push above 2070, I suspect, will have no volume. We'll see that number develop over the next couple of days. But my guess is it's going to be right around this 2070 level that we're going to see the market go sideways for a few days. We'll have 2 days forward, 3 days back, 2 days forward, 3 days back. And the cheerleaders on CNBC will be doing nothing but yelling at the top of their lungs how the market was up today, the market was up today, the market was up today. And 2 days later, the market will be significantly down and lower. Again, I suspect this is going to take over the next 2 months and probably into the FOMC actually raising rates before we see any meaningful bounce in this market. I suspect it is over. And I say when it's over. But we will continue on. We talked about a Minsky moment. A lot more people talking about a Lehman moment or a Minsky moment. But I think that those are coming. And we'll see. And certainly if we look at things like the dollar index out here, this thing is right now up against the bottom part. I think we had a false breakout below this 96.30 level. Or at 96.25 on the continuous contract on the dollar. I think that that does probably everything you need to know. And like I said, I'm not expecting these markets to come off the rails. The Fed's going to do everything they can to make sure that this is what they call an orderly market. That is, everybody didn't freak out and sell at once. No stampede. Stampedes will happen even though they try not to let them happen. But they'll come out and jawbone it as the market moves down, still do nothing and still raise rates. The idea is just to not get everybody all excited and have a huge movement in the markets that ends up being something they can't control. But from gold being off $4 today, I don't see a huge, I think this thing's going to take a long time. Maybe the rest of the summer to be done.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Peabody Energy came out and not with good news. It looks like they may have problems being an ongoing concern. They had a flood. They've had, what does it say? The rivers are running red and frogs are falling from the sky. Coal prices fell 15%. I said the other day when the coal companies won in the Supreme Court, not to get excited about this because it didn't really matter at this point. The government can keep them down until they go bankrupt. They just have reduced production. And if you read the whole thing out here, it just reads like we're going to hell in a handbasket. I'm not expecting these coal companies to continue, any of them that last until the first day of the next administration. If that would change, then maybe these companies have a chance. In fact, you probably have a good buy on a change of administrations of political parties out here for coal. Other than that, they're going to continue to nickel and dime these companies with EPA regulations and try to put them out of business because they truly believe that the coal companies are the boogeymen. Anyway, down on horrifically huge volume. The real question is whether or not this company can even continue as an ongoing concern, so keep on that. I had a email out here from Don in Odessa. that's talking about socialism. And I'm trying to get a gentleman on to give us a little bit more background. I've read his book. It's called The Politically Incorrect Guide to Socialism. But he goes through historically all of socialism, and especially the last couple hundred years from the rest of the gang that used it as a model to destroy lives and be horrible. And I think we could learn a lot of it in America. But I wanted him to really talk about how countries like Argentina and Greece would fare in the future, at least get his view on it. But we may need to start talking about how places here in the United States that have basically done the same thing. In fact, a very good discussion this morning with one of the few guys that I admire that come out publicly on CNBC, and Jim Grant from Jim Grant's Interest Rate Observer was out there this morning, and he says that, guess what? New Jersey, it's in huge problems. If you think, we already know about Chicago, we already know about Illinois, we already know about California spending money it doesn't have for a boondoggle that will make the big dig in Boston look small. But these guys, in fact, I heard a great discussion with Gavin Newsom, who's trying to run for, who will probably be the next governor of California. And this interview, basically, the interviewer was calling him to task. And he says, we've got all these big problems. And he goes, yeah, I like to work small to big. And I thought, if I went into him and ended up, having a leg missing or something and bleeding profusely, this guy would be the guy that wanted to probably check my teeth out and make sure that they were all in good condition, maybe give me cut my cuticles, everything but the pressing problem that could kill us right away. And the longer you talk to him, the more you figured out that these politicians like Gavin Newsom have absolutely nothing to do with solving the problem. They will look at it and then they will go off and progress that some other big issue is really the true problem instead of the one we have staring right in front of us. And I think Groucho Marx said it the best, that the business of politics is looking for trouble, finding it everywhere, and applying the wrong remedies. And probably good. Occasionally we get a good leader. Occasionally you get somebody like Winston Churchill that tells everybody what they don't like to hear. And eventually you can't avoid it any longer. And everybody wakes up. In fact, Winston Churchill said of Americans that they will eventually come to the right decision after they've exhausted all the wrong ones. And so I'm always optimistic about what's going to happen in America. I just know that we're going to have to do a bunch of stupid things until we get it right. But, it's different this time. And we'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, I found it during the break. If you want to, I would highly suggest that you watch the Mr. Grant's interview this morning. If you want the link to it, I found it during the break. In fact, I'll post it in the den if you want to. You can always email me at path@tfnn.com. Of course, you can call in and tell me how I'm all wet at 877-927-6648. But I think I'm pretty right on just about everything right now. Normally, these markets eventually line up. And had some other emails. We were talking gold yesterday, and someone asked me about being short gold. In fact, actually, 5 or 6 people asked me. And I said, you know, I just think that there are better things to short than gold, so I'm not short. I always worry about the fear of waking up one day and seeing a nuke go off and me being short gold. I would much rather be short the miners, because good chance that they're going to go up with that nuclear blast, and I will still get paid off. The problem is that if you're actually short the gold, it becomes incredibly illiquid in very tough problems. So I just think that there are better shorts out here in the market than going short something that could take your head off by mistake. And you never know what it's going to be. There's always a black swan event out there, but I don't like things that can actually kill me if I'm wrong on the trade. And normally, you know, even if it's $300 down on gold, It's just something that I think that there are less restrictive ways. A lot of people, you've got to almost think of risk, at least I think in the markets, the way that Nassim Taleb does and is fooled by randomness. And that is that you've got to look at risk as a revolver and you're playing Russian roulette. If you've got 50 cylinders out there in your gun, you still have one of those that could kill you if you play long enough. And the idea is to limit your losses or possible losses as much as you could. Not saying that you wouldn't make money being short gold. In fact, I think you could. I just would much rather be short something that didn't have the capability one day of being up $500 if something like a nuke goes off. Much more likely it could see a $100 move up or down. And I would just rather get something that probably I can predict, even in the realm of a black swan. I know probably what's going to happen on technology stocks. If they get bought out, I know maybe my upside or downside and a short is limited to 50% or something, or 30%. Ideally, hopefully, when that day comes, I have a call or a put on instead of actually short the actual equity, but at least one thing to think about. But that's it. Jim Grant, one of my heroes. I don't have too many of them. The other one is the gentleman that's only kind of come on the scene here lately, Mr. Powell, P-A-O. And he's from Britain, but he's got some very good long-term stuff for the markets. But anyway, Jim Grant, maybe I got enough time to play this little clip before we get into everything else. But he's talking about New Jersey.
All the
well, fake interest rates are not the way forward.
That's what I mean. Well, so Greece, let's say Greece stays, the euro stays. Is that the good long-term outcome, or should we just have ended this experiment now when it was,
well, there's nothing wrong with fixedness in money for hundreds and hundreds of years. We had fixed exchange rates. We had currencies defined as a weight of something. The pound was famously
right. So this will work eventually in Europe?
It won't work unless there's flexibility in labor markets, unless there's honest interest rate
reforms.
So he goes on to it, but it's maybe I'll find the juicy parts of it later. But you can always email me at path@tfnn.com. In the meantime, we're going to try to get to some of the stocks that are out here moving today. And we've got some big ones. Of course, if you missed it, Chubb is being bought out by Ace, and so we don't have anything more to worry about that. Basically, it's one of these deals where a bigger company is eating a almost as big company. ACE, it wasn't a whole lot of movement out here on that movement, but Chubb, of course, up, 28% or 30%? And I kind of want to, don't worry about that. HIG is another one moving out here today. It's up about 5% earlier today. The Hartford, of course, that's the bank shot on that deal. Not a lot else to say about that. TSO is up about 4% today. Take a quick look at that. Refiners were strong, even though, you've got just the opposite side of the crude market, which I'm thinking, I was basically saying this thing's going down to about 55 or 53. And we're close. We're only $2 away from the top end of that range. I suspect that we're probably, with this kind of movement today, and a lot of people extremely long crude over the last few weeks that I could see, they were all buying it as a form of protection against the Greek issue. And just too many people on one side of this trade. I still suspect that we're looking at that 53 to 55 level. But, of course, if you're a refiner out here, it's exactly what you want to see, and that's all that matters out here. Let's take a quick look at VLO. I don't think it's as big, but of course, it's actually doing pretty good. Not a lot of volume out here. Actually, I suspect all these energy companies are coming back down, but what we're seeing in this one is you've had two previous highs in VLO that had about 10 million shares. But the last major one was March 25th at $64.49, and you're getting into that today. Right now with 5.3 million shares, the energy was off about 20% on this last leg back up. I don't suspect that we're going to see anything different than maybe this one pop out for a little while and then come back into the trading range. And if we hang around 55 or 53 bucks, I suspect that the entire energy sector out here is set up for a bruising. Or as they used to say, cruising for a bruising. Large cap losers. Ba-bum, ba-bum. I got to play that again now. Do-do-do-do. I'm hooked on that now. Anyway, ex-Petriol, EC, of course, down fairly extensively. And this is breaking out the lows out here. Let's go back a little bit farther to see what's happening on this one. But now this thing's already broken out lows, and you know, not a lot of volume out here, but I continue to see these stocks breaking these lows with light volume. What normally happens is if these things don't break back into the trading range fairly quickly, what happens? They take a giant pop down one day, and then you get the volume. So this one's kind of, you know, you had about 3 or 4 dojis out here. This thing after these, well, let me zoom in here so you can see it. You either have a lot of accumulation or distribution when you see patterns like I'm showing now. In fact, let me zoom in one more time out here. Look at the extreme narrow range that you had in this thing starting on the 17th. That's either accumulation or distribution. That we pulled down here today and don't see a lot of volume says that whoever was either selling or buying this has stepped out of the way. And my guess is this would at least infer that what you had was somebody holding this thing up while they sold it. And now we're moving back lower. But you've got 2 more days for this to come back. If this thing would pop back above 13 bucks, maybe 13 and a quarter, you'd have to really look at it. But I don't think that there's anything out there. Yep, you got a new car. Ba-bum, ba-bum. Ba-bum, ba-bum. What else do we have out here? DY to the upside. And we'll play a little happy music for them.
Everything is awesome.
It is awesome at DICOM. DY, this nice little pop out here today. A little bit of volume, too. Of course, let's see what the news is on this one. I haven't had a chance to check it out. What I will be pointing out on this one is that you've got now 2 gaps, and I would expect a third. Maybe today is it. It looks kind of small, and I would like to see a lot more volume, kind of volume of this first gap. But if you look at this, this looks like it could have one big gap more left in it, and this one's kind of small. I like it to probably fill a little bit. What are they saying out here? Stock repurchase program. So maybe this thing moves back up one more time. But what's the profile on these guys out here? Range contracting, engineering, construction, maintenance, and installation services comprising of fiber, copper, and coaxial cables. Yeah, okay. So they're laying pipe, as a lot of people used to like to say, but all kinds of fiber and pipe and all that kind of stuff. But, you know, this gap here today is probably not enough. Look for one more gap out here, and then if it comes on light volume, you get a little reversal signal. Look for it to come back and fill all 3 of these gaps, because it looks like this one is setting up a 3-gap play for lower. SC is another one out here that's moving. Let me check the I got somebody asking, what do I think, Dave? But I'm not sure. Oh, what AGU? Let's take a quick look at that. In the den for Terry. Looks like an ABC on the way up, doesn't it? I would have liked a little bit more volume. I think you got some decent volume and a turnaround for tomorrow. But you had an ABC up. You had kind of a bigger one out here now. Let's see what the expansion would look like on this thing. If you look at a longer term one out here, I think you can make a case that this is a huge ABC up. Probably a little bit too much. That'd take it to 136 if you're looking at a longer term view of that. I actually think that you probably got a little bit more out here. I just dislike the market. Let's see if we could see anything smaller out here. Nah. I mean, if you're on bullish on this, then you have to look for, this thing going to 116.81, which is, I think, a good opportunity out here. Of course, the other thing you have to be thinking about is if this is a monster ABC on the way up. And what would that be? 90? 116? ABC on the way down would take you to 93.99. But I'm thinking what we want out here is the one that starts at 90. There it is right there. That would be the bigger one, and that takes you to 127.32 if this is an ABC on the way up. That's probably the one that I would use out here. It's probably closer to what's going on. If you break 116.81, I would say you're good for 127.32. And, if there are stocks that people love to run into when the market is going south on them, it's certainly sin stocks like alcohol. It's things that you have to eat because everybody's got to eat, like Agrium. I'm pretty sure, isn't this the right company I'm thinking of? Yeah, crop nutrients, crop protection products, seeds, merchandise products, primarily in the United States. Yeah, it's hard for me to say, especially with the movement in the grains out there, that you aren't getting any movement. We talked about IPI the other week, maybe a week ago, giving one of the best signals that we had in the market of at least making a bottom. I think it was longer term out here. Yeah, you've got a, let me turn this off here. You had a beautiful test out here. I would have liked it to test $10.60. It never did it. And that's why I didn't buy this. But on a shorter time frame out here, you had a nice test with basically 450,000 shares less. We got a nice bounce out of here. I would love to see some of these come back and test these high volume lows. In the case of IP, it's that $10.60 low. I don't know if you're going to get it with this industry really starting to wick up, but you had a giant sign of strength. What I dislike is you didn't get any follow through in 3 days after it, and that's what you've got to worry about. And if this thing would drift back lower, this may be one of the best buys, maybe late in the summer out here for IPI. But I want it to test that 1060 level that we saw a while ago. Let's check the email real quick. Oh, going to break. I'll check the email real quick and see if anybody else has anything. But, probably a pretty good bet out here that a lot of people are going to try to go into sin stocks and maybe ag stocks as the market pulls back. We'll be back in a minute.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're going to Steve in Houston. How you doing today, Steve?
Dave, doing great. Love your show. Great to hear you. You've got some great insights into this. You think a lot like me, and as a matter of fact, you're a lot like
great minds
Jim.
think alike.
That's right. And you and Jim Grant, I've listened to Jim Grant or read his stuff since the 70s, and he's a brilliant guy. And I think you and he are very much alike. So anyway.
Okay.
Anyway, the financials, the XLF, we have spoken about that before, and it may be a little early on it, but I kind of think I keep trying to short this thing, and I get stopped out, keep trying to short it. Somewhere I'm going to be right on this thing.
Yeah.
What are your thoughts on the XLF?
When it cracks, it's going to crack all at once. Everybody on Wall Street thinks that it's the sun rises and sets on it. For me, it's an ongoing criminal conspiracy All these guys, it's not another day before you find out that they've done something else that probably should have landed them in jail. I just don't understand the whole idea where low interest rates are good for them, high interest rates are good for them. In fact, I've never heard anything that was bad for them ever expressed on financial infotainment TV. So I don't know how these things could ever go down. What I do know is I see very ugly chart patterns out here. And I think we talked about maybe not shorting the XLF, but an individual company itself before. Is that my conversation?
Yes, it was.
Okay.
Yeah, Bank of America.
Yeah, to me, you got a giant Gartley on this thing. It's one of the good-looking Gartleys. I maybe went a little bit long on the right-hand side of it, but it looks to me like it's pretty much confirmed everything. You're just going to have a little bit more movement on the way down. But I think it's going to take a while. I've gone out with puts, even into stocks that are probably going to break fairly quickly out into September, October, and November. So I'm not expecting this pullback to be, a tidal wave of selling. I just suspect that until we get that first interest rate hit, that we're going to sell and dribble down and dribble down and dribble down. So I'd pick one, an individual stock, the weakest of the bunch, and either be puts on them if they're like this $17 stock, and or if they're expensive, above $50, then I might think about shorting the actual equity itself. The XLF, when one gets hit, they'll all just flood into the next one. And so eventually that index will roll over. I don't believe the idea that no matter what the interest rates are, it only gets better for the banks. I suspect that with the caps on interest rates for credit cards, that as interest rates go up, it actually means that people that pay will go down, and their spread between what they get and what they charge will go down too. That's my thought, but that's more of a Bank of America Visa kind of thing, right?
Yes.
But I think that they're in the same bunch. I just don't know. Anytime someone tells me, if interest rates go up, it's good for them. If interest rates go down and stay down for them, it's good for them. It just sounds to me like it's just something that doesn't wash, right?
No, but, it's all false. It's not correct. If I could, Dave, wanted to ask you about crude oil, and because a lot of those stocks are breaking down right now.
53 to 55 on crude. We're out of time. Call back tomorrow, Steve, if you'd like. Sell when you can, not when you have to. Hang on for Tom O'Brien. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.